The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And we started the show with the music of Jerry Lee Lewis, the Killer, from Memphis, Tennessee. And I have to share this story with you. I was in Memphis in 1995 visiting my best friend, Jay Crosp, who worked with Amos Hofstetter at Commodity Corporation in the beginning years, and one of my very dear friends. He since passed away the year after that. But we went to this little breakfast place to eat, just a little tiny diner, set about 35 people maybe, and we were having breakfast. And Jerry Lee Lewis came in, and he's everything that he seems to be, folks. He was really terrific, and he paid for everybody's breakfast. But on that same day, I met Bo Diddley. You guys probably don't know who he was, but he was one of the original rock and roll people, rhythm and blues from back in the 50s. So it was really cool. I met those two guys on the same day in 1995. Anyway, let's get to the markets. I posted the chart of the Dow Jones Industrial Average. We did not make a new high in the Dow in this run up. It made it up to the 786. What's interesting here is that it's made a almost perfectly symmetrical head and shoulders pattern. And if you look at the astro implications of this, the left shoulder was made on a new moon. The head was made on a new moon. And if this is correct, the right shoulder that we had on Friday was also made at the new moon. I don't know if you folks were watching the market Friday, but the Dow was up about 140 points at one point. And then it dropped to be down 50, so it had a 190-point swing. Then it rallied all the way back to the 61% retracement is where it closed. And now what we're doing is we're moving into to the downside, completing the larger, ABCD pattern. So we're going to see if that's going to be the case. Hey, we got our first caller, our friend from Singapore. William, are you there?
Yes, I am.
How are you, my friend?
Yeah, good. I'm good. Thank you for taking my call.
William, I had no choice. Yes. They put you through.
That's interesting.
Go ahead. What can I help you with, my friend?
Yeah, sure. Okay. My first question is on Tesla. Recently, it has a spectacular, a very spectacular move up to, I think, to 65, I guess, around the price, and then it is down. So I actually, is doing, a long put, which means I'm looking at the downside. But I'm not sure, what is your view on Tesla at this point in time?
Well, I'll tell you what I'll do is if I will make this prediction. If, Tesla's trading at around 241 right now, and the low we made last week was at 228. If we were to gap down either tomorrow or Wednesday, in other words, if we close around this area around 230, but if we left a gap at that 228 level, in other words, gap below it, that would be pretty much what happened to Apple when it was 700, William. So what you'd like to do is to see Tesla stay between, where we are now and the 230 level for the next day or so, and then maybe gap down on Wednesday below that 228. It would leave an island reversal, and that would be a very negative pattern, in my opinion. So that's what I'm looking at with Tesla.
Okay, in that case, I mean, it is good to actually be more on the short side than the long side, right?
Well, right now, you've been doing pretty well with it, so I should be calling you. Could you give me your number in Singapore so that we could have our friends give you a call?
Sure. But I think I'm learning things from you. Anything the credit is going to you.
Well, even the blind hog picks up a hog every once in a while. What's your second question? You said you had two questions?
The second question is on Apple. What is your view on the direction of Apple at this point in time?
Okay, Apple, as you know, topped back in late August of last year when we left that island reversal up there. And over the past 3 months, ever since November, we've made a series of lower highs. The low that we made last week was exactly at the 61% retracement down there at 515. And if we go below 515 in Apple, I think we're going to go down to the 450 level per share without any trouble. This is a weaker than market stock, and it's certainly in the downtrend. You know, we've had lower tops ever since November, with the rest of the market going up, and it's the most widely held stock in the world. So my assumption is it's still in a downtrend, and I'd be looking to buy it if it got to 450. But that's what the target looks like to me.
Okay, I got it. Thank you very much, Mr. Pesavento.
Thank you for calling in, William. It's always nice talking to you. You live in a beautiful country. That drive from the airport into the city is one of the most beautiful drives you can have in an airport.
Oh, yes, I think I love that drive, but the only problem is that we do not have the fall season that, we can experience snow, like what you have in the U.S.
Hey, William, I was in Denver this weekend speaking at the Denver Trading Group, and believe me, the experience of being in snow was way overrated.
Oh, really?
I had to clean the windshield off with ice and snow on Sunday morning to get to the airport. So it's way overrated being in snow. It looks really pretty, but it's a little too cold and a little too wet for me. But if you like snow, that's the place to go.
That's why I'm considering, moving to U.S.
Yeah, well, don't pick Denver.
Okay.
And actually have two homes. Have one in Denver, and then have someplace, like in Florida or Arizona or California when the weather is cold. But during the spring and summer, both of those days in Colorado, Denver, those are really nice. But boy, that wintertime, it's a real killer.
But I remember, in Arizona, when come to winter, it's really beautiful, right?
Yes, we have well, it's year round. It's nice here in Arizona, but we do get the tremendously hot summers during July, August, and September, when we also get our monsoon rain. So every season has a problem in the States. In Florida, it's the hurricanes. In the Midwest, it's tornadoes. In the East, it's the cold weather and stuff. So there's no place like Mecca. So don't worry about it.
But at least you have a fall season. In Singapore, it's either raining or shining. You don't have any other things.
All right. Thank you for calling in, William.
Much.
You bet.
Thank you. Bye.
Okay. All right, folks. We're going to take a look here now at a couple of things that I think are relatively important here. One is I posted this before. I have to make it just a tiny bit larger so everybody can see it a little bit better. But this is the. Give me 1 second so that I can get it ready here. I hope it works this way. And you'll be able to see the chart on the Dow Jones. It's a monthly chart that goes back, quite a ways. And it shows that we're making this large ABCD. And, that's really what we're looking at to see if it's going to, see if it's going to have a move to the downside. That the pattern is certainly completed, but there's nothing else that you can look at that other than that large monthly pattern. And being as large as it is, it certainly is a big one to look at. So someone had a question about. Oh dear, I've made a little mistake here about showing that picture. So give me 1 second, and I'll see if I can arrange this camera so that I'm able to do this correctly. So hold on 1 second, and I should be able to do it this way. That ought to do it. I hope it does. I hope that brings the monthly chart in. Otherwise, it'll be in my newsletter. If you take a look at it there. But anyway, it basically shows that this long-term monthly ABCD pattern is perfectly symmetrical. Now, I'm going to give everybody a little bit of homework here, okay, in order to make, if you prove something to yourself, it gives you a better idea of, whether things work that way or not. But if you go back to where we were in 2007, if you remember, we topped on October the 10th of that year. And if you go back to the low, which was this is when I first started my radio show here at TFNN. It was right after August the 15th. We had that big bottom that formed, and from August the 15th until October the 10th, we went up for 57 days. And this year, we have gone up from the high to the low. From the low to the high, we have gone up a total of 57 days from the high that we made on December 31st. Now, we haven't made a higher high in the Dow Jones Industrial Average. We haven't made a higher high in the transportation, and we haven't made a higher high in the Dow Jones Utilities, but we have made a higher high just very slightly by the New York Stock Exchange Index. Now, I've had 3 requests this morning to talk about what's happening in the Ukraine. And folks, believe me, I don't know what's going on over there. I know that it's pretty serious, of course, because anytime you have troops that are from a foreign country going in, but you don't know how it's going to end, and nobody else does either. If you'll remember, the last time we had a major conflict or a war like this was on January the 17th of 1991. And that was our Desert Storm War, and everybody talked about, everything going crazy to the downside, and it never did. It went straight up. We've got a call from Scott in Colorado. Are you there, Scott?
Yes. Hi, Larry.
Hi. We're going to probably come up to a break here pretty soon, so if we come to the break, just stay with us, okay? What can I do for you?
Sure. Well, I was at the Denver Trading Group for your talk over the weekend, and it was really nice to see you, and it certainly clarified an awful lot of questions I had, even after reading your book a couple times, so I want to thank you for that. I had a general question about time and price. You touched on that in your presentation. In that measurement, do you always go from the ultimate low to the ultimate swing high, whatever pivots you're looking at?
Yes, we do, Scott, and the reason for that is that's the that's exactly where the cycle turns from. Now, what we try to do is we like to look at some astro things to see if it helps fit at those points. But you should take the lowest low and the highest high because that is the cycle high. Now, the move might not start, for 5 or 6 days after that. That's where it really kicks in. But the highest high and the lowest low is the way you should do your measuring. I was a big fan of W.D. Gann. He did all of his measurements that way, as did H.M. Gartley. And that's how I was taught by John Hill and Dr. Ruth Miller. So I've always used the highest high and the lowest low for my A point or my X point.
And I assume that's the opposite on a downtrend. You just go high to low.
That's correct. You just and usually the easiest way to do it, to be simple about it, is to count the number of days. That's why I was saying to the folks here, prove this stuff to yourself. Go back to 2007 and see what happened. That was 56 days. If you go back to 1929 and you look at September 3rd to October 29th, what do you come up with? 56 days. If you did 2000 and when the market was topping, 56 days. And now we have a big anniversary date coming in on Wednesday because that's the anniversary of the big bottom that we made on in March of 2009. Stay with us, Scott, okay? We'll talk a little bit more about symmetry when we come back.
Okay, thank you.
Okay.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back with our friend Scott from Colorado. Are you still there, Scott?
Yes, Larry. Thank you.
Okay, we were talking about cycles and time and price, and when I first started, looking at this phenomenon way back in the late 60s and then beginning very strongly in the early 70s when I was doing work with James Hurst, The Prophet's Magic of Stock Transaction Timing, and then shortly thereafter I got in to the astrology part, and that's what really piqued my interest because of the fact that when these lows occur, many times they're going to occur when you have these major astrological things happening, and the way we went about proving this is we looked at the low from 1932, the high from 1929. We went all the way back into the 1870s, but two of the most prominent ones occurred during 1974, during October and December. That was the crash of 1974. It was called the October crash, 1974. We made a double bottom in October, and we made another bottom in December. And on both of those exact dates, you had multiple conjunctions and oppositions of 4 or 5 different planets. And then that didn't occur again until the high in 1987. So this is what really got my interest into the the astrology part, and that's why you have to use. You get back down to the simple question. You have to use the highest high and the lowest low, because if it's correct, it's going to be over, something that is, geophysically correct. Let's put it that way.
Okay, so if you're moving, if you're working with different time frames, it doesn't necessarily work out exactly the same way because the astrological aspect may not be in play. Is that correct?
Well, if you're doing time frames, you can only work on the daily or weekly time frame if you're doing astro things. I've not found anything very well. That works very well for intraday stuff. But for dailies, that's what I'm referring to, is you're looking at a date. Well, for instance, the new moon, came in on Friday. It was also when Mercury went to direct station. In other words, it stopped going from negative to positive, or, it looks like it's going backwards, but in fact it's not. That happens 4 times a year, and that has some really strong significance. So all of those things, and you have to add others too, but that's what, gives you the edge that you think that you have with time, and that's all it is. It's an edge, and it's what you think it is, because sometimes it just flat out doesn't work, as we well know.
Sure. Well, I'll let you get to another caller, but I really appreciate your information, and you piqued my interest again to look into this. And thank you again for coming to Denver. It certainly was a well-spent day, and we all got an awful lot out of your presentation.
Well, I knew you were the fellow that was awake because most everybody else was asleep, so that's how I remember you. Hey, listen, thank you for the kind words, and Denver is a great place. I'm a big fan of the Broncos, so it was fun being there.
Great. Well, come back in the summer. We won't have snow then.
Yeah. Well, both of those days of summer are already booked, my friend, so have a good time, and may God bless. Okay, now we're going to take a look at the bond market here after we come back from the break, because when you have a flight to quality, you're always going to get usually have the bonds moving very strongly in an upward direction, and we've had a pretty good rally here so far in the bond market, and we want to take a look at that when we come in after the break. Right now, the market is really not doing down very much. We're down a little over 1%. With the Dow being just down about just about 205 points. The S&P's down about pretty close to 20, and the Nasdaq's down pretty close to 50. We've had a big move in gold that took out the last week's high, but we've had a big divergence between gold and silver, and I certainly want to cover that also. So it's very important that we take a look at that, and that's really what we want to be looking at. We've got a caller from Tampa, Florida, on the dollar. Are you there, Ellen?
I sure am.
Okay,
How
now
are you?
I'm great, but we might come up to the commercial time. We have to pay some bills for Mr. O'Brien, so if we do, you stay with me, okay?
I sure will.
Okay, what is your question?
What happened to the dollar index overnight? Why did it crash?
Well, it actually had a pretty good rally, as I recall. It should be trading at around 79.90, something like that. Isn't that where it is right about now?
Well, yes, but Sunday night it went down.
Oh, yes. That was because of the news from the Ukraine. Stay with us, and I'll cover that when you come back. Okay?
Thank you.
You bet.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're talking with Ellen from Tampa.
Yes.
And how is your weather?
Beautiful.
That's what I like to hear. I like that area of Florida. It's pretty close to Tom O'Brien's place, and it's really quite lovely. Longboat Key is our favorite hangout. Anyway, you asked a question about what happened to the U.S. dollar recently. Well, we had a pretty good rally in the euro. I posted into the Tiger Den what I'm looking at technically, and it looks like we formed a head and shoulders pattern in the euro, so it should start down. Now, what's interesting, Ellen, is one of the things that I've watched over the years when markets get real volatile, especially when we have conflicts like we have going on in Ukraine, that I watch the currency markets to see if they get crazy. And by crazy, I mean you'll notice that the bid and offers on the trades between the euro, which is the largest traded thing in the world, it's 1,000 times bigger than any of the stock markets. But if that gets crazy, in other words, people are lowering their bids or raising their offers, the spread goes from 1 or 2 pips out to 10 or even 20, you know that there's panic coming. But that didn't happen last night. We had a very quiet market. The euro opened a little lower, the dollar opened a little higher, and it hasn't gone anywhere. So that's telling us that there's no one in the world is panicking yet. I mean, they might panic in the next 30 minutes or the next 2 days, but right now there is nothing really significant happening in those currency markets that I can see that's telling us that there's a panic coming of any proportion.
Well, that's good to know. Okay, so you think it's...
That's my opinion. That my opinion is good to know. Whether it's right or not is a whole different animal.
Well, what in essence you're saying is that the dollar crashing was in effect because the euro was going up.
That's exactly correct, because the dollar index is 53% weighted by the euro, and so when the euro goes up, the dollar will go down. That's the basic of what we're looking at when we're watching these things.
Can I ask you one more question?
Let me check my schedule. Yes, you can ask me one more question, and even two. Go right ahead.
Regarding the Dow, you mentioned that there was a head and shoulder. Can you expound on that a little bit more?
Absolutely. Basically, if you look, in fact is what I will do, I'll even put it back into the Tiger Den so that everybody can see it, because I think it's a pretty significant event, and we can take a look at it because it's related to the things that we look at, and that is we've had some full moons and new moons recently, with the latest new moon occurred on Friday. And that was also when Mercury went to direct station. But if you'll take a look at it, if you go into Tiger TV, you'll see that we made a shoulder in late November, and then we also made a shoulder to Friday, and they're almost at the same price. They were within about 100 points on the Dow Jones Industrial Average, but the high was made on the new moon of December 31st, which was the Bradley model date that we would be, looking at as the high. Now, we made a new high in the U.S. Index, New York Stock Exchange Index, and the NASDAQ, of course, but we have not done yet in the Dow. But the NYSE's made another high, so you have to respect what it did Friday for sure. But if you take a look at it into Tiger TV, you'll see the head and shoulders pattern. It's quite easy to pick out.
I don't think it's up.
It should be up there now. Take a look at it. It should be in there because I just posted it again the second time. If it's not, I'll put it in there again. But it should be in there. Yep, it's in there, and we'll see if it's there. If it's not, Ellen, all you have to do is just drop me an email at larrypesavento@gmail.com, and I'll send it out to you. That's not a problem to do that. So if you just remember my email address, I'll send it out to you with no problem at all.
All right. Well, thanks a lot.
It's my pleasure. Thank you.
Bye-bye.
Okay. All right, folks. Now we have to, when you're watching these, markets that get crazy like this, money has a tendency to move pretty quickly when things get crazy. And one of the places that it moves is to the bond market and to the gold market. And so what we're going to do is we're first going to take a look here at the gold market because it's had a pretty good run here above the highs that we made the other day. And then what I wanted to do was to show you the relationship of what's happening to silver at the same time, because here we've made a higher high above the 61% retracement in gold up at the 1352 level where it's trading right now. However, with the silver market, and I think this is the one that really has my interest because it's the poor man's gold, silver has been lagging very, very badly again. And every time that's happened, we've had a really serious correction in the markets. And so I'll put this up so you can take a look at it because silver wasn't even able to take out the highs of last night early. And so this is a sign that this move in gold might be a little suspect because if people were really scared, they'd be buying some silver too, and they're certainly not doing that. If you look at this, you'll see that we've had a whole series of lower highs since our high back on February the 24th, and each of those highs that we've had has been lower and lower in the silver, whereas in the gold, we've made a higher high over the past several days. So that's telling us that you be really careful, buying the gold up in here because it's there's a lot of emotionalism coming in it when it's up $30 and silver's up about 25 cents. But silver should be up well over $1 if it were following along with the gold, and it is not even close to that. So those are divergences that I think are important. Of course, that's my opinion, and but that's the way it looks like to me. Just by watching the market all the time. I see these divergences, and when they happen, I think they mean enough. They mean enough to me that I have to report to you what I'm seeing on those things. Now, someone asked me about they talked about Basel having a line in the sand in the Dow Jones Industrial Average. I believe he said it was right around 16,000. We got down to 16,060, and I believe he has the right number. If we go below 16,000 in the Dow, which would be equivalent to 1825 in the S&P futures, that would be the trigger mechanism that would make me feel that we would be heading a lot lower very, very quickly. It might not happen today. It might take a day or two to do it, but if it does that, that's what you're looking at. If you want to really be safe, 1812 in the S&P futures is a very, very important number because that's where we bounce from every time on the way up. We backed off and rallied and kept going higher and higher. But here again, the same thing that happened with the Dow Jones on Friday happened with the S&P. We broke. We were up about 10 points. We ended up went down 6, and then we rallied back exactly to the 786 retracement, and then the market closed there, and then of course it opened lower, because of the news item. And believe folks, the news follows the trend. We were probably going to come down anyway, no matter what happened. All this news is doing is making us come down pretty quickly. Now, remember that in the Dow Jones, since December of last year, we've had, I think, a total of 5 moves no, it's been more than that. I think it's been 7 moves where the Dow has moved up or down 300 points in any one day. Most of them have been to the upside, of course. Now, remember, when the market starts to expand, it's going to be 1.618 of that. So a 500-point move in the Dow is going to happen, and it's not going to be unexpected because that's only a 3% move. And we've had a 3% move, more than that, in the German DAX today. So this is something that some of the other markets around the world are experiencing, and it could happen to us too. We're not familiar with that right now because the market's been going straight up since we took off in December of 2012. We basically went straight up for a whole year. We had some nice corrections along the way, but it was pretty good because everybody was making 20% on their stocks, and they think that that's a normal thing. And in fact, it doesn't happen that way very often. So you've got to keep that in your playbook to remember that that's an outlier event when you come up with something that much of a big chart, or a big move. Someone asked me to repeat what I said about the DAX index, the German DAX. That's equivalent to our S&P. It's down over 300 points, and it trades with a handle of 9,600. So that's better than 3% in one day, and so that's a huge move to the downside. We would be down over 450 points if we were doing that in the Dow Jones. If we had a 3% drop in one day. But Germany's not the U.S., and the U.S. is not Germany. So each of these is different, and different types of traders, different types of economies, and different types of cycles. So you've got to look at each one separately. The key this week, folks, if you're listening and to the show and stuff, is to go back and defy human nature. Do the work yourself, and this way you'll prove it to yourself that these numbers that we look at are very interesting. So go back and look at the major high in 2000. Look at the major high in 2007. Look at the major low back in 2002 and see the number of times that you see these 56-day moves, those 56 trading days that goes from high to low where it finally culminates. And that's what we had happening in the stock market on Friday coming into the new moon. But there's a lot of things that are telling us that we've been saying this for a long time. Maybe this is it. I don't know. It's still rather early. But if we do go below that 16,000 level in the Dow and 1825 in the S&P futures, then I would think that the tree is starting to bend in the wind a little bit, and we could get one heck of a big correction. And it'll probably be different this time. It'll be bigger than what we expect. That's usually what happens when you're dealing with new moves, and this is where we are because this is certainly an uncharted territory. No matter what you're looking at here, is that the market has been been straight up since February 3rd when the Bradley model bottomed, and that was 2 days after the new moon then, and now we've made another new moon coming into the high. So it's going to be quite interesting these next few days, especially as the news comes back and forth across the cable. Can you imagine what it was like years ago when they wouldn't even get this information? Back in 1906 when they had the big earthquake in San Francisco that basically devastated the city. They heard about the earthquake in New York, but no one really thought it was very much because the reports coming in weren't really that bad. It wasn't until about 2 weeks later that it started to come in to see that we were looking at some really serious problems on the West Coast, and then the market turned down sharply, which turned into the panic of '06. So now everything is instantaneous, and you get to see it right off the bat. I have to report on something else that's very, very important to all of us here, and that is someone asked a question, what is the longest period the market has gone without a 10% correction? This is it. I think this is the longest we've ever gone without a 10% correction, I believe. 96 or 97 might have done it, and also 99 and 2000 might be a record, but I think we're pretty close to that now. However, something happened in China over the weekend. I don't know if you folks are aware of it, but up in the northern part of China, north of Beijing, there were 10 people that went into a train station, crowded train station on a Sunday with long knives, much like that you see on the Ninja Warriors, and they killed 29 people and wounded 130. And this is a big thing in China, folks. This is equivalent to what happened to us in 9/11. Things like that don't usually happen in that country. And so this is really something that you ought to follow in the news to see what's happening. They did catch one of the people, and they also were the police shot 4 others, but there are 5 that are still still at large. But the fact that they did so much damage, and I'm sure some of the 130 that are injured are probably not going to make it, because with knives like that, they can do a tremendous amount of damage. So I don't know what it means. All I'm saying is that it's a big thing in China. It's shaking them up quite a bit, and believe me, China will crack the whip. They don't put up with stuff like that very much. I can promise you that. That's the way it goes. I can remember when I gave my first speech in Beijing in '99 for the Chicago Board of Trade. The Ronald Reagan had just died in May, and they had lowered the staff, lowered the flags on Embassy Way in Beijing, which is an incredibly beautiful place with beautiful tree-lined boulevard with the mansions there, and each of the flags of the nations is flying there. And everybody lowered their flags to half-mast because they were a big fan of Ronald Reagan, except France. France would not do that, and the premier asked them to do that, and they still wouldn't do it. And so China didn't do anything except it was 2004. You're right. It was 99 was my first speech, but 2004 is when it happened. It was May of 2004. Anyway, what China did was they turned off the water and the electricity until they lowered the flag. And so it was about 12 hours later, France, finally lowered the flag. So we'll see if if they do something really significant with what's going on with what happened. This is very unusual to see a terrorist act like that in China. Like maybe there's more of them that we don't hear about, but this was in a very remote area of China where it occurred. Okay, we got this Dow down 200. We'll be right back after a few minutes.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin, here on TFNN.
Okay, folks, someone asked me to talk about bonds a little bit. We are still in the midst of a rally here in Treasury bonds. We switched over from March to June, and I believe that the June bonds have a potential to get up that 137, 138 level. We've been in a very strong bear market, interest rates going higher for a long time, and so that doesn't look any different to me from what it should be doing. So, keep an eye on that. The one other question that we had, the reason, expand on this bond thing, the reason why you usually get a strong move when there's terrorist type things in bonds, it's called the flight to quality, where people want to put their money, in something highly qualified. However, they've been putting their money in junk bonds, and that's they don't call them junk for no reason at all. We got to take this call. We got John from Philly, snowed in Philly. How are you, John?
Hey, Larry, it's only 2 to 6 inches today, so...
Oh, just only 6 inches? Hardly anything.
Not to worry. Larry, thanks so much. The Dow Jones pattern, you showed that symmetry of time, lower price, high, Astros, new moon, turn, that sort of thing. I'm confused, however, I'm suspicious. I'm suspicious when I look at the NASDAQ and the NASDAQ 100. Could you microanalyze that to see if there's something in that leads you to think that the top or a high might have been put in place in the NASDAQ 100 last week, 37.22?
I would be happy to, John, and it was it's something that I've looked at quite a bit. It's that expanding triangle pattern that we have. If you'll give me 1 second here, I've got to get it lined up so that I can show it very quickly here, and you'll be able to see it here with any luck at all. So just give me a little bit of time.
As you're doing that,
go ahead.
I'm going to ask you to address the following issue. I know you trade the futures.
Yes.
I know you actively trade the S&P futures. That if assuming that's correct, have you found spots that you feel comfortable putting on shorts in the NASDAQ futures as well?
Oh, sure. Yeah. Friday when we had that big move, just a second. I'm not able to get this darn thing hooked up right. Hold on 1 second. You know, John, trying to get me to do two things at once is a real challenge, and I'm trying to see if I think it gets into the room. Yes, Friday, because we had the big break, the market was up 150 in the Dow, then to be down 50, and then in 1 hour it rallied back to the 786 retracement, and the NASDAQ, rallied back to the 61% retracement, and I felt, well, if it's correct, it shouldn't open lower, on Monday, and, with the thing that happened in Ukraine, I guess that's the reason, why it happened, but it has completed that same pattern, that 1, 2, 3, 4, 5 expanding wave, reverse point wave, and I think that that might be it, but, this market's been very, very bullish for a long time, and nothing would surprise me. Every time I think I'm never surprised, I'm always surprised, so I just wait and look at one day at a time.
Excellent. Thanks for sharing that one detail. And I just have to lastly say the Tom O'Brien and the TFNN team's Tiger Den. It's terrific. You get to go to Denver.
Yeah.
And then people from Singapore
in the middle of winter,
Colorado get to call up and speak to you live. That's just fabulous.
Yeah. I lost a sales contest. That's why I had to go there in the middle of winter. One other thing that's interesting, John, and this goes back to what Basil was talking about. If we get the Dow down more than 300 today, I'm pretty sure the top is in. But until that happens, we have to wait and see. Live every day in an attitude of gratitude, my friends, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.